Hey guys, good morning and welcome to the Camp Financial Market Update for what would be July 1, but for the weekend through the 4th, and getting us ready for this morning, July 5th. Let's take a look at how the Dow ended. Let's look at how the indexes ended. So the Dow ended the week last week at 17,949. So it bumped up against that 18,000 mark early in the day on Friday, which is kind of a support line for it right now. To figure out whether it's going to be able to hold up there or come back down and bounce off of it. So it's support and resistance right now. Now let's take a look at the S&P 500. So the S&P 500 closed at 21. We'll call it 2103. It's 2102.95. But like I had mentioned in the last video, which actually I think got deleted and didn't even make it onto the YouTube channel. But 2103, we're less than 1% below the close of the previous Friday before the Brexit scare, and now we're back into a situation that looks like everything's going to kind of go as planned. That the fear has dropped out from Brexit. There's beginning to be a lot more understanding around exactly what that means for the market, what that means for individual companies and countries, etc. So I think now we're getting a better feel for exactly what we're looking at there. So let's take a look into the indexes here and see what drove the index that day. So let's go to Friday, and we will start with the worst performing companies in the S&P 500 from Friday. So the bottom 5 are Micron Technologies, Williams Company, an oil and gas pipeline company, Humana, the healthcare company, Avery Dennison, a business equipment company, and then Chipotle Mexican Grill. So for me personally, I know I got a little extra research here that I'm probably going to have to do in the next couple of days to understand a few of these businesses, because I'm actually not even really familiar with Avery Dennison or the Williams companies. So we'll be able to have to take a look at those and see what's going on there. So Micron Technologies was the worst performer. It was down 9%. But something to remember, obviously, is this came right on the heels of a pretty big run up over the last, give me just a second, let me scroll over. So from the middle of May until July, the price had run up from about $9.50 to almost $14. It actually had went above $14 in June at one time and then come back down, and then it bounced back up to 14, and now it's dropped back down to 12.50. So even at that, obviously, again, trying to time the market, getting an exact bottom is pretty unreasonable. But taking a look at looks like the 20-day. If you take a look at the 20-day moving average, it would have moved above it in late May at about $10.50 a share, and it held above the 20-day, dropped a little below in mid-June, and then that's when it pushed up to 14, and then now where it's dropped back to is right around that 20-day moving average. So that's something you may want to take a look at, something you may want to consider with that company. So we'll see where it goes from there. I didn't look to see if there's any news or anything on it that pushed it, but my guess is there's something happened. I mean, for a stock to just drop 10 points, something's usually got to happen to push that. So now let's look at the top performers. Our top performers from Friday: Harley Davidson, Indo International, Chesapeake Energy, Transocean, and Netflix. So Netflix is interesting. Well, so out of that we've got a couple of oil companies. Chesapeake's independent oil and gas. Transocean obviously is the driller. Indo International we've talked about before, healthcare company. Netflix obviously cable TV, and Harley Davidson, the maker of awesome motorcycles, right? So let's take a look. I want to look and see what drove Harley Davidson on Friday. I mean, it was up 20%. Was there some big news that came out? Looks like they've got. So I'm reading a thing that says they lead their peers with strong fundamentals. But I wonder if this has something to do. Well, that would have been after the market on July 1st. Harley Davidson shares up on a possible private equity interest. So there are rumors out that KKR is interested in buying Harley Davidson, which obviously drove the stock up 20%, and made for a pretty good day for some investors. I know if I'd have been in shares of Harley Davidson, I'd be pretty pumped about that. So good stuff. So that's what drove the market up. Well, the Harley Davidson stock up Friday. So let's take a look. Now I want to take a look at, I haven't put the July 1 data into my spreadsheets yet here, but so I ran it at the end of June. I'm looking at my 3 systems that I use to invest with. Okay, the one that's quantitative, fundamental, and technical. It uses all 3. Tries to pick the best stock in each sector. And it tries to pick when I'm, so if I don't historically have shares of a regional bank, this would look and find, okay, where are regional banks at fundamentally right now? Okay, and then it pulls together all those regional banks, whether it be the Midwest, Northeast, etc. So pull all of those together, and then at that point I would run the screens and figure out which one looks poised to be the highest performer out of all those regional banks. So this system right now is up 10.1% for the year. Let's look at the other system, and I can tell you that the 10.1% is probably highly being driven by my purchase in company Safe Bulkers, shipping company. I got into it while it was down extremely low, and now it's trading at $1.05 a share. It was cleared out at 44 cents a share, I believe, in January. Yeah, 44 cents a share in January, 64 cents in February, 80. And then it got up to $1.25, and now it's come back to $1.05. But so we're still holding on there and waiting on it to make a pretty good run. So now the strictly technical based, where the stock's got to be above the short-term moving average, and the midterm has got to be leading the long-term moving average. But before I get to that, hold on, let me go back and take a look at this one. So this system was up 0.87% in the month of June. The quantitative one was up 0.87 in the month of June versus the S&P that was up 0.09%. The strictly technical system is up 8.5% on the year versus the S&P 500 that's up 2.7% for the year. And a lot of the difference in that was made this month because the technical system is invested in Agnico Eagle. It got into Agnico Eagle back in in January, or it might have been February. I think I might have purchased in February. Let me take a look. I know I've talked about this one before, but I forget. Yeah, February 11th, I went long on Agnico Eagle at $37 or $35.75 a share. It's currently trading. It closed Friday at $55 a share. But yeah, so this month that system was up 4.53%, and the total system for the year is up 8.5%. Taking a look, looks like I have 2 positions that are down in this system for the month of June, and those were Thomson Reuters and I believe it's Adtran, ADTN, Adtran. So yeah, that system's performing pretty well for the year, up 8.5%. And now let's take a look at the last system, which is based on purchasing stocks at a value to their historical, stocks that are trading cheaper than their historical value, their historical multiples, what their growth, etc. It's strictly looking at longer term fundamental behavior of the stock and trying to purchase the stock when fundamentally it's trading cheaper than it historically does. So this system, like I said, has only been in place since April 20th. That was the first day I bought in with this system, or first day I started using this system after I tested it. It was performing pretty well through the end of May. And June, the Brexit deal, Unum Healthcare totally smacked the system. Unum Healthcare was down in the month of May. I don't have the percentage here, but I'll give you a rough ballpark. So it looks like I lost a little over $300 on it in the month on a $2,200 starting investment. So you're talking about 15%, 14% roughly. Exelon Company was up, and Sunoco was down, and Marriott Vacations Worldwide was up. So, all in all, the system was down 1.4% versus the S&P that was up 0.09%. And so far for the year, so the year end, so this is really only April 20th through the end of June, the system is down 1.57% versus the market S&P, which is down 0.17%. So currently it's trailing the market, but a few good months out of the stocks that it's invested in, and it could quickly jump well past the S&P 500. So that's it, guys. I want to keep this thing to 15 minutes today. So I hope your 4th of July weekend went very well. Hope you grilled out, had some good food as we get ready to go back to trading and watching the markets today. Take care, and if you have any specific questions you want to send me, you can send me an email at chrism@campfinancial.net. That'll be in the YouTube notes, and I'll put that on. I'm working on getting these converted over to podcast format, so we can, so that way you can take them on the go with you. You don't have to watch the videos, and yeah, hopefully be able to reach more people and help more people out there. So that's it, guys. Take care.